Well, South Africa's economy is expected to be one of the continent's worst performers this year.
That's according to the World Bank's latest growth forecast.
The international lender has cut its 2019 growth expectations for South Africa to a paltry 1.3%.
Well, as the NCA's David Murugan reports, the news is not great for job creation.
9.5 million people of working age are without jobs in this country, their fate largely dependent on a growing economy fueled by confidence and accompanying investment. But the World Bank's latest forecast suggests the economy will not reach labour-absorbing levels this year. In fact, with the growth forecast at 1.3%, South Africa is now among the worst performers in sub-Saharan Africa. That's lower than the region's overall expected growth rate. Other emerging market countries have also had their growth expectations cut. The lender says the trade war between the United States and China is causing collateral damage to the global economy. It sees a big jump in borrowing by the poorest nations, much of it in foreign currency, and debt that is increasingly coming from private lenders. But to get local activity to turn faster on our farms, mines and in factories, there are some domestic concerns.
I don't think that we're going to see a very big improvement in the short term. The consumer in South Africa remains constrained financially. The business side confidence is certainly quite weak, and some of this lingering policy uncertainty that we've had is something that's not going to go away very quickly, at least not in the short term. So I think you may see some of these themes continue to play out in the manufacturing sector in the short term.
Government has been trying hard to attract investors, having secured hundreds of billions of rands worth of pledges last year. But fears of erratic electricity supply from Eskom, uncertainty over land policy and labour strife have put a lid on those investments materialising. The World Bank's growth forecast of 1.3% for 2019 is less optimistic than the Reserve Bank's 1.9% and Treasury's 1.7%. David Murugan, Johannesburg.